Assalamualaikum. My name is Sharifah Natasha Safia binti Said Murtada. My ID number is 2025950603 and my group already chose LEONG Hub International BERHAD versus SENG Capital BERHAD for our group assignment. Without further ado, I will continue about company's background. First of all is LEONG Hub International BERHAD. So it is founded in 1978 and also in Kuala Lumpur Stock Exchange on 29 October 1990, and it has been main market of Bursa Securities on 16 May 2019. The operation is integrated poultry farming, feed mill, manufacturing, trading, and last one is food process and distribution. The products from LEONG Hub International BERHAD such as Malindo Food, IMAI, Baker's Cottage, Sunny Gold, and Happy Egg. The board of directors is Tan Sri Datuk Lau An Guang, Tan Sri Lau Tuan Guang, and also Mr. Lau Chiang Guang. Next, on the 24 April 2012, both LEONG Hub Holdings and MV First BERHAD were withdrawn from the main market of Bursa Securities Malaysia after being privatized by emerging Glorious Indian BERHAD. After restructuring was completed, the Affinity Equity Partner Private Limited International Sudan BERHAD on 9 September 2014, while the founding Lau family retained the outstanding 77%. LEONG Hub International Sudan BERHAD was converted into a public company on 17 August 2018, officially becoming LEONG Hub International BERHAD. Hence, it was listed on the main market on Bursa Securities on 16 May 2019. Like I said just now, in the earlier. Move on to the SENG Capital BERHAD. The vision of the company is enhance sustainability of business by focusing on cost effectiveness and develop corporate values that align with the vision. The historical milestone of SENG Capital BERHAD is firm layer by laying birds with the capacity of 120,000 in 1992, and also in 1995 it upgraded all layer farms to the CHS and introduced Pepe Egg tray. It also launched the premium eggs brand called the Happy Egg. And lastly, it implemented AIAO farm system. The board of directors is Mr. Lau Junpeng, the executive chairman. Next is Mr. Nam Hyok Cho, managing director, and lastly is Mr. Loh Wing Chi, the executive director. SENG Capital BERHAD established on 8th May 2006, and also it converted to public limited on the 31st May 2006. It also listed on Bursa on 28th October 2008, and lastly it goes to main Bursa on 3rd August 2009. The achievements of the company is automated and computerized animal feeds production, awarded by Singapore AVA for egg exports, initiated distribution of animal health products, secure exclusive domestic distributorship from Bayer Animal Health.
Hi, my name is Nur Alam Syirah binti Muhammad Sang with number matric 2025198831.
Today, I will briefly present about the liquidity trend analysis of LEONG Hub International BERHAD from 2020 to 2024. Let's start with the current ratio. Over 5-year period, the company showed a steady upward trend, which is from 1.07 in 2020 to 1.43 in 2004. This consistent increase indicates an improving ability to cover short-term liability using current asset. A ratio above 1.0 is generally considered healthy, so this upward trend is a positive sign of liquidity strength. Next is the quick ratio, which excludes inventory from current asset. It also improved year by year, reaching around 1.0 in 2024, showing that the company could meet its short-term obligation even without relying on stock. Lastly, looking at net working capital, which is current asset minus current liability, it rose significantly from RM 154,627 in 2020 to RM 935,970 ringgit in 2024. This growth highlights the company's strength, short-term financial positive, and operational efficiency. Now, let's move on to the activity and profitability ratio of LEONG International BERHAD. Starting with the activity ratio, we observe the inventory turnover, ITO, and fixed asset turnover, FATO, from 2020 to 2024. ITO shows how efficiently the company turns inventory into sales. It improved from 5.85 times in 2020 to a peak of 7.16 in 2023, before slightly dropping to 6.55 in 2024. This reflects strong inventory management overall. For FATO, which measure how well the company used its fixed asset to generate revenue. The ratio also increased gradually from 1.06 in 2020 to 1.46 in 2023, indicating better asset utilization, a small dip to 1.44 in 2024, but still shows consistency in performance. The gross profit margin (GPM) remains strong, consistently above 67%, although there was a slight decline in 2024. Operating profit margin (OPM) and net profit margin (NPM) both shows continuous improvement, with OPM increasing from 4.68% in 2020 to 9.57% in 2024, and NPM growing from 1.95% to 6.78%. This highlights improved cost control and higher profitability. Finally, return on equity and return on assets showed excellent growth. ROE rose from 5.23% to 18.96% and ROA from 4.97% to 13.82%, indicating stronger return for shareholder and efficient asset usage. In summary, the company has shown positive trend in both activity and profitability, reflecting stronger operation and financial performance over the 5-year period. Finally, we look at the debt ratio and debt to equity ratio, which measure the company's financial leverage and risk. Starting with the debt ratio, we can observe a decreasing trend over the year. It started at 60.52% in 2020 and dropped consistently to 48.37% in 2023. This indicates that the company has reduced its reliance on external debt to finance its assets, moving toward a healthier capital structure. Next, the debt to equity ratio shown on the right reflects how much debt is used relative to shareholder equity. It remains stable at around 0.39 to 0.45 between 2020 and 2023. However, there was a significant drop to 0.17 in 2024, which showing that the company has significantly reduced its debt and relying more on equity financing. Overall, both ratio indicate that LEONG International BERHAD is managing its financial obligation more conservatively and reducing risk and strengthen its balance sheet over time. Thank you.
Assalamualaikum and hi, my name is Siti Nur Shadla binti Muhammad Fikri with ID number 2025911805. So as for now, I will continue with a ratio analysis of your SENG capital. So first, we go to the liquidity ratio, which is current ratio, quick ratio, and also net working capital. The first one is the current ratio. As for the current ratio, in 2020, the current ratio is 1.13 times and decreased to 109 times in 2021. However, the ratio have increased from 2022 until 2024 with 1.116 times, 2.16 times, 2.48 times respectively. It shows that the current ratio of Tiosan Capital Berhad has a higher ability to meet its short-term obligation in future. Number 2 is a quick ratio. In 2020, the quick ratio started with 0.86 times and then decreased to 0.83 times and then decreased to 0.82 times. But then, the ratio going through the upward trends by 2022 until 2024 with 1.066 times and 2.02 times. This shows that higher ability to pay its short-term obligation without having rely on liquid current asset. So the third one is a net working capital. As for the net working capital, the ratio have going through a fluctuation from 2020 until 2022 and then a sharp upward trend over the 5-year period beginning in 2023 that represent that the firm current asset are financed with long-term financing after 2021. The next one is activity ratio. So, the first is inventory turnover ITO. As for the ITO, the Tiosan Capital Berhad have gone through the fluctuate ratio over the 5-year period from 2020 until 2024. As you can see, it began with 6.88 times in 2020 and then decreased slightly in 2021 as at 6.62 times and then follow the increase in 2022 with 6.69 times and then suddenly then rose to the highest point in 2023 with 7.07 times and go through back, the lowest inventory turnover rate was recorded in 2034 with 5.68 times than its previous year. So the firm is moderately, effectively using its inventory to generate sales except the lowest decline in 2034. The next one is TATO, which is total asset turnover. As for the Tiosan Capital, the general upward shown from 2020 until 2023 begin with 0.81 times in 2020, and then 2021 with 0.85 times, 2032 with 1.05 times, 2033 with 1.08 times, and then follow the decline in 2034 at 0.89 times. This shows the slightly fluctuate trend indicates that the firm is able to utilize its overall asset and moderately in managing its asset. Next one is ACP, which is average collection period of your SENG capital. So sales capital have shown a downward trend through 2034 after a peak in 2031. It began at 2020 at 40 days and then slightly increased to 45 days and consistently decreased in 2022, 2023 and 2024 with 37 days, 32 days and 30 days respectively, which is mean the firm is still good in managing its credit sale and also have a more cash in hand after a peak of 2021. The third part is profitability ratio. As for the profitability ratio, the first one is gross profit margin, GPM. For the SENG Capital Berhad in 2020, the GPM is 30.67% and then decreased in 2021 by 26.83% and then going through the upward trend by 2022 with 27.22%, 33.50%, 40.26% respectively for 2022 until 2024, this shows that the company have been able to control COGS, which is cost of goods sold, relative to its sale revenue. Next is OPM, operating profit margin. So in 2020, the OPM was 2.25% and then decreased in 2021 with 0.91% and then having the recovery ratio in 2022 with 4.50% and then continuously increased in 2023 with 21.37% and the highest percentage was recorded at 26.32% in 2034. So Teosen Capital Berhad shows a significant upward trend that indicates that the firm is able to provide more return because the firm is productively managing its asset except in 2021. So the next is net profit margin, NPM. So in 2020, the NPM was 0.88% and then decreased to its lowest percentage in 2021 with 0.5% and then the recovery begin also in 2022 with the NPM increase to 3.32%. In 2023, a sharp increase brought the NPM to 24.07% and the highest percentage was recorded at 24.33% in 2034. The continued upward trend of the Teosen Capital, except in 2021, indicates that the firm has a better growth prospect and is also able to provide the generate net earning to shareholder in earning more ringgit. This part in profitability ratio is ROE, return on equity. In 2020, the ROE was 1.36% and then slightly decreased in 2021 to 0.68%. In 2022, the ROE was increased to 6.67% and increased in 2023 also with 32.66% and then slightly decreased in 2024 with 29.65%. The return of equity of Teosen Capital shows a significant upward trend, particularly between 2022 and 2023, which indicate that the firm is still be able to maximize the owner wealth and give higher return for the owner of the firm. The last one in profitability ratio is return on asset, ROA. In 2020, the ROA was 1.82% and then this percentage decreased to its lowest percentage of 0.77%. In 2022, a recovery began with the ROE increase to 4.73% and then a sharp increase brought the ROA to 23.08% in 2023 and the highest percentage was recorded at 23.45% in 2034. The data of return on asset ROA of Teosen Capital indicates that the significant upward trend which indicate that the firm is able to control costs in its operation, asset are productive and provide more return. The fourth ratio that I present to you is leverage ratio. So the first one is the debt ratio. In 2020, the ratio began with 47.8% and has slightly increased in 2021 to 49.95% and then continuously decreased in 2022, 2023 and 2024 to 45.05%, 32% and 29.9% respectively. This shows a general downward trend after peaking in 2021, which means the firm is still good in managing its debt and has low financial risk. The last one is DER, debt equity ratio. In 2020, the ratio was at its highest point of 0.32 times and then continuously decreased in 2021, 2022, 2023, and 2024 to 0.28 times, 0.24 times, 0.17 times, and 0.11 times respectively. This show the consistent downward trend which indicate that more funds are provided by owner compared to the creditor.
Assalamualaikum. My name is Nur Shahira binti Azali and I would like to present about the comparative ratio analysis, which is LEONG International BERHAD and SENG Capital BERHAD. From the analysis of liquidity ratio, both of the company is the current ratio of LEONG International BERHAD is 1.43 times in the years of 2024. Meanwhile, SENG Capital BERHAD is 2.48 times, which is 1.03 times higher than LEONG International BERHAD. The quick ratio shows that LEONG International BERHAD is 0.99 times, then SENG Capital BERHAD 2.02 times higher with 1.03 times than LEONG International BERHAD. Next, the net working capital is 935,977 in LEONG International BERHAD. Meanwhile, SENG Capital BERHAD is 239,810,434. SENG Capital BERHAD has more net working capital and it shows the ability of a company to be more secure and stable. From the analysis of activity ratio, is inventory turnover of LEONG International BERHAD is 6.55 times and SENG Capital BERHAD is 5.98 times, which is LEONG International BERHAD higher with 0.57 times than SENG Capital BERHAD. Next, the average collection period of LEONG International BERHAD is almost 25 days, while SENG Capital BERHAD is almost 31 days. For total asset turnover of LEONG International BERHAD is 1.44 times, then SENG Capital BERHAD is 0.89 times with a difference of 0.55 times from both companies. From the analysis of profitability ratio, is the gross profit margin of LEONG International BERHAD is 67.37%, while SENG Capital BERHAD is 40.26% with a higher 27.11% in that comparison. The operating profit margin of LEONG International BERHAD in 2024 is 9.57% and SENG Capital BERHAD is 26.32%. For operating profit margin, the percent shows less is better performance in the company than more percent. Next, the net profit margin of LEONG International BERHAD is 9.78%, while SENG Capital BERHAD is 24.33%. The return on equity of LEONG International BERHAD is 18.96%, while SENG Capital BERHAD is 29.65%. Lastly, the return on asset of LEONG International BERHAD is 13.82%, while SENG Capital BERHAD is 23.45%. From the analysis of leverage ratio, is the debt ratio of LEONG International BERHAD is 48.37% and SENG Capital BERHAD is 26.91%. SENG Capital BERHAD is lower than LEONG International BERHAD in 21.46%. The debt equity ratio of LEONG International BERHAD is 0.17 times and SENG Capital BERHAD is 0.11 times. Both companies are less than 1. It indicates that more funds are provided by owners compared to creditors.